Good morning to all traders and welcome to this Monday's Market Insights video provided to you by Orbex. Is the 10th of February today. We're going to talk about indices. That's going to be the S&P 500 as always, and also the US index in the US. We have interesting events this week, with the highlight of course being Powell's testimony. He is believed to be dovish, and that is probably going to help the US equities see further gains, which makes me think that probably we're going to hit fresh all-time highs. Now, the equities are being supported by the latest NFP data and also other economic data in the US, of course. The risk on, let's say, shift again after fears of the coronavirus spilling over to other economies and other countries, let's just say, have deteriorated a little bit. And of course, after the China inserting liquidity last week, I think it was Monday if not mistaken, in order to mitigate some risks from the spillover of the coronavirus in the Chinese economy, the weakening in the Chinese economy, if you may. Now, the S&P 500, we talked about it last Monday, right? It seems that it's moved exactly as we expected. I think last Monday we were down here and we talked about this becoming an ABC. This was the case. We've had an ABC coming in forward with a longer period compared to wave 2, obviously, because wave 2 was a little bit sharper. And then we started moving up again. We've had wave 1 in the minute wave done, and now we are actually completing wave 2. It can either be a case where wave 2 is going to finish here, and then we're going to move higher for wave 3. And wave 3, just to show you what I see, wave 3 is most likely going to take us, up to some level, new all-time high. And then we're going to see 4, and then we're going to see 5, which is going to be minor 5 as well as intermediate wave 3. And then we should see an ABC correction for wave 4 in the intermediate term, and then another one move to the upside to pretty much end this long-term cycle to the upside. Now, the question is, what is going to happen around these levels over here? And just to offer some better insights over here, let's go down on the 1 hour. So we could have two different scenarios, right? Because we've got A, B, and C over here. It means that we ended here and we're going to move to the upside with another 3 move, with another impulse. Or the other scenario would be that we've got A, B, C, and then we're going to get another A, B, C up there, and then another A, B, C, probably going for a W, X, and Y. Okay, and we're going to move lower because we still actually can get to around 32.75 without this move to the upside being invalidated, which means top of wave 1 could still maintain this move to the downside or to the upside, if you may, as impulsive. If we get this move extended down to 32.70, right? 32.70, yes. It means that we're going to get an extended and elongated wave 2, okay? And that would suggest that we're going to get a sharp wave 4, okay? So keep that in mind when you are thinking about the S&P. Now, the more interesting analysis is here on the US index, and I will tell you why. I was seeing this, as you very well know, if you've been watching. I was looking at this as an impulsive move to the downside with wave 1, and actually, no, I was looking at this as like 1, 2, 3, 4, and 5, and then I was looking for this to be wave 2, and then wave 3 to the downside, right? And then 4 and 5, of course. Now, we might say that, okay, if it's not a 1, 2, 3, 4, and 5, then the next alternative closer would be that is an ABC, and then we see prices moving up. Right? Again, yes, that is the case. But the reason that I have another alternative in mind, and this is what I've actually labeled here today, is the fact that we've now penetrated the top of this is the wave 1 low, right? This penetration seems to suggest to me that we are in a corrective move, okay, in a corrective pattern, which means indeed, okay, we can be in an ABC. But also, the thing that, the way I label this now indicates that this is the first wave to the downside, okay, and it is a leading diagonal. We've had a W, X, and Y over here, had or still have. A was done, B was done, and we're looking for another wave C now to complete. This, to me, and since we crossed above the 98.62 barrier, it could go up to around 99, right? That would complete wave B. 99 is the 161.8 extension, Fibonacci extension of the first move to the upside, right? So the 98 96 at the same time is the 78.6 Fibonacci retracement of this move to the downside, right? And this level is usually a level where wave Bs are actually ending corrections, right? So we've had wave A, B to 78.6, and then C, okay? When wave C can end anywhere below the 96.36, which is the previous low, and would respect the relationship of this correction. However, what I'm also seeing here is that the previous low over here is the 96. So potentially, once we start correcting from up here, right, that would suggest that prices are going to move to at least the previous low, which is the 96.36 level.